Hello, everyone. So this is Tong Kaviwood, CEO of SCB 10X. Today, we will be discussing in the topic of from corridors to stablecoins, how Asia Pacific institutions move values in 2026. It's my pleasure here to welcome our guest back here again to Redefine 2026 with me here, Fiona Murray, MD of Ripple Asia Pacific. Hi, Fiona, how are you?
Hi, thank you so much for having me again, and delighted to have our conversation today.
Yeah, thank you so much for your time. So let's jump right in. Maybe I start with the first question because I think stablecoin is a big topic from the beginning of the year. And last year we talked about why Asia Pacific became such an important region for Ripple. 1 year later, right now, where are you now seeing the clearest shift from experimentation into the kind of repeatable production flow?
This is a great question, and thank you for asking it, Kuntong. You know, the stablecoin landscape has really matured in the last year or so, and here in APAC, what we have is that foundation of clear and strong regulatory frameworks. You know, here in Singapore, there's the framework in Hong Kong now, and really strong signals that we're getting around institutional adoption and progress specifically for stablecoins in Japan and Korea. Ripple itself, we've been using stablecoins in our own flow as a regulated financial institution for many years now. That is in production, not been an experiment. It's easy for us to say this because we've been at that intersection of TradFi and digital for a very long time. So that ability to use stablecoin to manage our own treasury position as the provider of a global payment network has been super important for many reasons. Because just for the audience today, stablecoins are always online, 24/7 available, which gets rid of a lot of the issues that we as enterprises have in moving funds around the world. Many other reasons as well that I'm sure we'll cover through this conversation. But really, what we're seeing is not just treasury movement, but we're seeing adoption of stablecoin along critical trade flow. That's one that I'm very excited about because it touches not just fintechs, but banks. Corporates are all looking at how do I grow my customer base? How do I grow into difficult to reach countries and geographies? How do I trade with them? And stablecoin again is a really important answer to that challenge.
Yeah. So when an institution choose, the payment corridor, meaning I mean like a specific route for moving money between one country to another, what is the real decision framework when they have to pick one? The stable coins, local rails, corresponding banking, and some hybrid model. Can you share some thoughts on that?
Yeah, I think I like that you brought up the hybrid approach because it's really relevant to the way that an enterprise or an institution makes decisions. We're not in this black or white universe where you have to be all stablecoin or you have to be only fiat. And I would say in that evaluation of corridors or of the best thing to do is actually to look at the use case. So, and I'll give you a few examples. So if you're looking at treasury movement, so that's, moving funds on your own behalf to operate maybe operating accounts around the world. If you're looking at moving funds between the majors, so euro, US dollars, those are really well-serviced corridors by the largest institutions in the world. There's lots of liquidity there. Margins are very thin as a result. They're pretty well covered in terms of access. But actually, in terms of the speed of that actual delivery, there's room for improvement a lot of the time. So even in those really well-serviced corridors, you might not be able to move funds in real time, particularly, after bank cutoff hours or on the weekends. So that's a corridor that might benefit from stablecoin outside of banking hours. Another challenge or another use case is where we're looking at and it applies to any corridor, but where you're looking at the cost of pre-funding. So the correspondent banking network really works off of a pre-funded basis around the world still. So do I have liquidity available to me in Japan if I'm sending to Japan, in Thailand if I'm sending from Singapore to Thailand, and that cost of capital is it can be really significant. So again, a stable coin, because of its 24/7 availability, can cut across that pre-funding requirement, and we're helping institutions move to that just-in-time funding using stable coins because of the way the technology works. I'll give you another example here. I mentioned payments across trade flows is a use case that I am super excited about, and that's because the utility is so clear. So take a merchant somewhere in Africa. Their home currency is not what they can trade with because trade is US dollar denominated. So if I'm in Nigeria and I want to buy goods from China, I need to get access to US dollars. That is slow, it's expensive, and it's difficult. So I take my Naira, I need to find an institution that will trade that or swap that out for US dollars. If I can find somebody, it's often very expensive. If I want to use a bank to do that locally, it could take 3, 5 or more days to source that US dollar liquidity. And when you're dealing in large trade flows, then that's just far too much time. So that's a perfect use case alongside the corridor of trade flows from sub-Saharan Africa all the way through to the east. So very relevant to us here in Singapore, in Thailand, being able to participate in global trade flows. Stablecoin is a wonderful tool for that use case of, access to real-time US dollars. So I'll say, to summarize then, the easiest corridors to adopt stablecoin or digital assets are those where pre-funding is prohibitive, where speed is of the essence, or where access to US dollar is just not straightforward, cost effective, or efficient.
Okay, that's clear. I think we are cover RLUSD last year at your launch, and now that I think the market had some time to absorb it. Where does the bank or enterprise actually now want to stablecoin the workflow, and where do they still prefer, or do they still prefer something else? How do you see that?
Yeah, we've come, it's exciting. We did talk about the launch last year, and it has been a whirlwind year since then. And we have so much learnings that we've had since that point in time. So just for everybody's knowledge, RLUSD is Ripple's US dollar-backed stablecoin. It is issued out of our NYDFS trust charter in the US, which means that we have full reserve backing 1-to-1 for the currency, and we've issued it out of a regulated entity that gives us bank level oversight. So we have volunteered to have a huge amount of regulatory oversight and overheads from a compliance standpoint in order to be able to work with regulated financial institutions that care about a compliance first backed stablecoin. And you asked me to reflect on where the market's absorbing this. Well, I'm excited about two main areas of adoption. So the first is in capital markets and around liquidity, and the second is in payments and settlement. So probably no surprises here, but I'll take you through those two areas. So on the capital market side, a compliant stablecoin is a really useful tool because it can be treated as good collateral. So if you think about the way that a bank operates, perhaps a universal bank, concepts like collateral, deposits, access to investment products are all of these tools that a bank uses to service its customers. These are all starting to exist in the digital world, and stablecoin is a key enabler for unlocking that value. So I'll take a simple example, a bond, fixed income. The cost of entry to the bond market is really high. often hundreds of thousands of US dollars to as a minimum entry level starting point to acquiring a bond. And then it can take a lot of time to settle that bond and then to have that bond ownership confirmed. So participation in this asset class is difficult, it's expensive, it's limited, and it takes a long time to settle. If you think about in the digital world, where that bond is digital or tokenized, if you use a stablecoin, you can move in and out of that in real time. And that's not even taking into account, all of the benefits you'd get from fractionalization of the tokenized asset itself. So, that's one simple example of just using stablecoin to access financial products in real time and to move in and out of those assets. And if you think about that on a wider scale, really any asset can become collateral. That collateral can be moved in and out of different stages into yield-bearing assets, for example. Speaking of yield-bearing assets, a great example of what we're doing here in Asia is the project that we have with DBS, a bank here in Singapore, and Franklin Templeton, global asset manager. What we're enabling there is the ability to on-ramp to move from RLUSD into Singapore Benji. That's the tokenized money market fund. And even more exciting is the ability over time to take a Benji, repo it, and get RLUSD back, and then you can repeat that cycle. So, for an institution in this space, the unlock of real-time collateral moving into a yield-bearing asset and then back and forth to usable currency is a pretty big liquidity unlock. And so that's that capital markets piece that we're really, really championing the use cases for. On the other hand, I mentioned payments and settlement. There's a unique advantage of being able to use a currency that is available to you 24/7. And that really lies in settlement and clearing. So I talked about trade flows, and the advantage that we see with using RLUSD is that institutions are coming to us and they want to be able to accept stablecoins to open up their horizons for their customers, to be able to accept stablecoins in Nigeria, in Brazil, etc. And the challenge that they have is they don't want to touch a non-compliant stablecoin that they can't track. So what they want is that compliance first stablecoin. They want to work with an institution that is regulated, has skin in the game, and understands what there is to lose. And that is, a really significant and growing customer base for Ripple of institutions that want access to a bank grade stablecoin that can be used transparently throughout the whole trade flow.
Wow, cool. I think that's very clear. And looking forward, how do you see what part of the operating model has to be redesigned first before this cross-border stablecoin flows will become, reliable? I would say in production, like treasury management, reconciliation, compliance review, liquidity, pre-funding or exceptional handling, which is very important. How do you see that play out?
Yeah, I love this question. And I love it because I'm going to disagree with the premise. So this concept of needing to redesign our entire system in order to interact with or adopt this new asset class, I think is the wrong premise to start with. And we heard this a lot in the early days in various markets of oh, I can't touch digital assets until I have a on-chain clearinghouse or an on-chain exchange, and it has to be decentralized and so on and so forth. Where actually what we're finding in reality is that you can gain access to digital assets. You can give your customers exposure to these digital assets, provided you have the right partners and the right licenses. And I make it that simple because of what we are actually seeing in the world and what we're enabling and the flows that we're enabling. So the right partner is there to take away the complexity of dealing in digital assets. So yes, you do need new architecture and new technologies to deal in this new asset class. That is true. It is a different technology. It is a different asset to manage. And the first question that you have to answer if you're a regulated institution is, how do I keep my customers' assets safe? So that means thinking about on-chain compliance. That means thinking about wallet infrastructure to actually hold the funds or the assets themselves. That means potentially a custody layer to and so on. So there is a lot of complexity that exists around enabling a new asset class. But if you work with a partner that is licensed, that has skin in the game, and that owns that architecture and has the regulatory oversight to be able to deal in those assets, then a lot of that complexity can be moved to or outsourced to your partner. And so, what we see actually is that a lot of these large regulated institutions are able to bring exposure, access to this entire asset class through a custody layer, through the technology, and through exposing their customers to regulated players that have already built this. And I think that's, I share that because it's the easiest way to enter and to provide customers with value. And I think that often when we are talking about digital assets, that gets a little bit lost because we're looking for utility or we're looking for something brand new. Actually, starting from first principles of providing access to an asset class that is in demand is good enough. And there are players out there like Ripple that are specialized in doing that already.
Yeah, thank you for sharing that. And I think a lot of payment projects, on the speed, they look fast in the demo or POC and when they test it in the sandbox, but become painful sometimes at scale. So from your experience, where do you see like the production failures usually appear first in this kind of cross-border value movement?
Yeah, there are absolutely challenges in running a cross-border business, and those challenges can range from a corporate who has to manage people in different, in different time zones, with different laws and jurisdictions. Those are very easy to conceptualize, some of the challenges that arise as a result of that. There's the whole trust piece in cross-border as well. When you're paying within Thailand domestically, there's a central bank. They back your payments. There's no trust problem between the large institutions. When you're sending from Thailand to Japan, for example, there are two currencies, two systems, no trusted party in the middle of that flow, and that brings about its own challenges. And these are not digital problems, by the way. These are just cross-border problems. And so those issues are often compounded by what is available domestically on local rails. So again, I take Thailand as an example with prompt pay, beautiful working system. Often, though, when you're sending into Thailand, there's going to be a cap on that transaction size for real-time payments. Depending on the country, those domestic real-time payments can be capped at a very small amount, a few $100s, or up to, I think it's $200,000 in some other countries. But if you're looking at moving large corporate flow very quickly, you can't use real-time domestic systems for that last mile leg. And so when we are making the cross-border piece efficient, we still have to think about who we partner with and what methods are available to our customers on that last mile. It's still really, really important, and there's more work to be done, frankly, on just some of those domestic challenges. The other piece that I think about is liquidity. So, talking about stablecoins and particularly using a US dollar-backed stablecoin is a great way for a payment company like us to balance our own treasury movement. One thing that matters is that interaction with the last mile and the availability of fiat liquidity and pairing that with stablecoin. So these are just, again, some of those challenges that that do exist, and it varies by corridor and it varies by jurisdiction.
Yeah, definitely some challenge there. Let's talk about the company that Ripple recently last year acquired, Hidden Road. I understand that the company give Ripple a much deeper position in the market structure and the collateral flows. So what does that change in the practical terms for how institutions think about, liquidity, settlement, and the balance sheet efficiency?
Yeah, so Hidden Road, now Ripple Prime, is a really exciting piece of how we're rising to the challenge. And one of those challenges that we've talked about is liquidity. So Hidden Road and Prime are a great way that we are seeing that that evolution of institutional readiness to deal with digital assets. And so again, we're once again mimicking a lot of the features and mechanics of TradFi. So prime brokerage is not a new concept. It's the ability to move capital efficiently on credit a lot of the time. And so we are bringing that into the digital asset space together. So using assets like RLUSD as collateral in trading flow and use cases at various venues, and bringing out those use cases like further repos in different jurisdictions again, and all of that is about that unlock of liquidity, which financial institutions need in order to do anything at scale.
Okay. And in Asia Pacific, specifically where you're currently leading, so what do you see? What makes one corridor stablecoin ready while another still, remains better served by more kind of traditional infrastructure?
Yeah, I think most corridors have the capacity to use stablecoin in one way or another. There are some hard lines, so where the regulatory bodies ban stablecoin, that or I say ban or require a local stablecoin, then there's an obvious disadvantage there. We just don't go into those markets, frankly. Interestingly, for Ripple, we still have significant holdings and usage of XRP. So there's a very natural pivot for us to use XRP for funds movement, which we've been doing for a long time and continue to do because of its speed and the accessibility of XRP. So just because something doesn't work for stablecoin doesn't mean digital assets is out of the picture. There's the whole institutional readiness piece. So I mentioned, having access to partners and the technology that matter. Those are there are varying states of institutional readiness in different geographies, and that's a natural inhibitor of adoption. And then finally, again, that challenge that many players in the digital asset space have is liquidity and availability of more of the accessibility to that stablecoin. So on and off ramping, the ability to move from fiat into digital. It's really important that local players have local currency access into global stablecoins, and that's a network challenge. There are regulatory elements to think about in that network challenge. But really, if to take that example again of Nigeria, if you hold Naira, you want to be able to move from Naira into stablecoin, into a US dollar stablecoin. You don't want to be pushed down a US dollar route first, because if you have access to US dollars, then you don't need the stablecoin in that specific circumstance. So these are all of the considerations that exist. They also exist here in APAC as we're on various stages of that journey.
Okay. So probably we have some time for one or two last questions. Looking ahead, especially maybe, what would convince you by the end of this year that stablecoin-based value transfer in APAC is no longer a kind of a specialist, strategy, but a part of the normal institution, treasury, and payment infrastructure? What are some of the signals that you look at?
Yeah, this is an interesting question, and I don't believe that stablecoins are going to be the mainstream way of moving value by the end of this year. But I do see really strong indicators that there'll be a mainstream add-on or redundancy play for some very large institutions. And the way that we think about this is when we get invited into large financial institutions to help them with their board presentations, to build strategies with them and their regulators. What we're seeing is that no one is on the fence anymore. So it's become a very clear table stakes question of what is your digital asset strategy? And often that's around stablecoins. And so, the times have definitely changed, and the market is very significant, and the maturity of these organizations jumping into this space indicates that we're now seeing really significant adoption by the financial institutions because their customers are demanding it. And so, if you look at the adoption of stablecoins by financial institutions, I think last year we were looking at about $33 trillion of circulation, and that's not an insignificant amount. We expect that to grow more this year, but realistically, it's not going to be, the main method of value transfer yet. So what I would love to see more of is regulators treating stablecoin as just another method for payments. Not as a special case. That's going to make a difference when it's not treated as a scary asset, but brought into the normal everyday business plans of regulators and regulated institutions. And so, I feel it's also our duty to share what is an easy way to get started and to work, and that's not boiling the ocean. Choose a corridor that you have pain in, and talk to a licensed partner that can give you some advice on whether it's worthwhile looking at adding redundancy or adding this capability to your flow, because the chances are that you'll be pleasantly surprised.
Yeah, thank you for sharing that. I think we have a couple minutes. So is there anything else, final thoughts, or any peak that we can expect from Ripple in 2026?
Yeah, I think we're in a wonderful space and time. So much has changed on the regulatory side, and I do really emphasize that is the key enabler for institutions going fully in. I expect to see a lot more connectivity between stablecoins and tokenized digital assets. So again, will expect to see more of this mimicking of TradFi mechanics, but making them better, faster, and more accessible. And so we're just getting ready to work with many more of those large financial institutions, fintechs that are looking at improving customer value, and also startups that are looking to build in this space, because we've got the teams to help them on the XRP ledger.
Yeah, I think we are right on time. But thank you very much. I think definitely, in the area of, remittance, payment, settlement through stablecoin will be here to stay. And, Ripple is one of the global leaders in this space. So we are very grateful to have you here, Fiona, and look forward to talking to you again soon in the future.
Great to see you again, Kuntong. Thanks for a great conversation.
Yeah, thank you.
Bye.